You've probably heard about smart money concepts. These trading strategies use market structure and support or resistance levels and are extremely profitable. What if we told you there is one indicator that incorporates all of these into one? In this video, we are about to reveal the only smart money indicator you need to succeed in the markets. As always, nothing in this video is financial advice. It's all for informational purposes only. The trading strategy and indicator can be used to trade stocks, forex, and cryptocurrencies. We will also be covering the rules for both entries and exits so that you can maximize those profits. Before we begin with this incredibly powerful trading strategy and indicator, make sure to click the like button on this video, type boom in the comments, also subscribe and turn on the bell so you never miss any of our future videos showing you amazing trading strategies on TradingView. We have some amazing bonus content for you later on in this video, so make sure you watch until the end. This highly profitable strategy featured is based on market structure changes. What this means is that it uses market structure as a way to find high probability entries in the market. Market structure refers to the arrangement of price movements in a given market. It describes the patterns and trends that emerge as buyers and sellers interact with each other, resulting in changes in the price of a currency pair. The indicator that we'll be featuring is the Lux Algo price actions concepts. This premium indicator automatically identifies the market structure and patterns for traders, helping you trade smarter. Already has over 5,000 likes with over 50,000 Lux Algo users. To get the Lux Algo Premium Indicator, click on the link in the description below. Let's start by taking a closer look at the labeling that the market structure indicator uses. A BOS label represents a break of structure, where the price is just breaking the recent highs or lows. You can see that these are indicated as bullish or bearish, which are shown in red or green. Then we have a change of character or chalk label. Now, a regular bullish chalk or change of character label is when price breaks the recent low, making a bearish BOS, and directly breaks both the recent low and high, forming a regular chalk. And this indicates a possible reversal. However, when the market forms a higher low and then breaks the bearish structure, which is marked as a chalk plus, meaning it's just a more confirmed change of character, or in other words, a better reversal signal. You will also see a solid line with a BOS in the middle of the diagram. This label demonstrates a break of structure, taking into account the longer term price action on the chart. What this means is we have both solid and stripe lines indicating different types of break of structure. Before you ask, yes, all of these labels are generated in real time, and no, there's absolutely no repainting of these labels in the indicator. The next important aspects that we'll see are the order blocks that have volume metrics. These help you find better points of entry by showing the interest of actual volume metrics plus the buy and sell volume bars in between in colors. It is important to note that the entire indicator is all pretty much based on price action, however more specifically market structure. Now that we have a better idea of what the indicator is showing on the chart, let's take a look at how to place a buy or long trade. What you see is that we have a break of structure or BOS that is printed in green in the market. It is important that you have to wait for the candle to close. The BOS is the confirmation that we have a higher high identified by the Lux Algo indicator. The green BOS is our buy, entry, or long signal. Next, we look at our fair market value, and you will notice that the green volume is engulfing the red, showing that we have bullish momentum. Next, we use the price analysis and we look at the candle that created the break of structure. You will notice that it was a large bullish candle that was breaking the resistance level in our example. This means that we have bullish momentum and volume behind the trade. With the volume in the market, we can place our trade with confidence. It is important for the strategy to work correctly that you have all of these confluences in place. What I recommend you do is simply place your trade with the stop loss and take profit and simply let your trade play out. You will notice that we are on the 1 minute time frame. So this strategy will create multiple trading opportunities for your day trading. In this example, we had a stop loss of 88 points or 8.8 pips with a take profit of 139 points or 13.9 pips. For this example, the market took 6 minutes to reach our take profit level and we were able to secure a 1.5% return for every 1% of the account that we risked with this trade. So let's take another look at the buy or long rules for this scalping strategy. First, we need to have a green BOS or break of structure showing that we have bullish momentum. This means a green BOS with a strong bullish candle in the uptrend that breaks the structure. Secondly, we need to be showing strong momentum with our price analysis. Next, when it comes to our fair market and our fair volume analysis, we need to have a larger green bar than red bar on our fair value gap. It is important to have all of these confluences in place before placing your trade and aim for a 1 to 1.5 risk to reward for this 1 minute scalping strategy. Let's take a look at a sell trade example. Firstly, we have to wait for a BOS or break of structure. It is important for the strategy that we are only trading the BOS as our entry, as you will often notice a change of character label printed, which could show a potential reversal. However, we will be trading the BOS as our entry. It is important to wait for the candle to close. You will notice that the candle that broke through the resistance was a strong bearish candle showing us volume and momentum. Next, we look at our fair volume gap indicating a strong bearish rather than bullish momentum. This means that our rules are in place, meaning we simply place a sell or short trade with a stop loss above the fair market value and aim for 1 to 1.5 risk to reward, meaning for every 1% of the account that you risk, you should aim for a 1.5% return. Now that we see the trade playing out, let's take a closer look at the summary of the sell rules again. You will notice that the trade started strongly with the additional volume that closed below the support level. We have a pullback, meaning that the level has now established itself as a resistance zone. Remember, once a support has been broken, it could typically turn into a resistance. And then after trending down, eventually the trade will reach our take profit. The scalping strategy is designed for the pound yen and to be traded on the 1 minute time frame. What this means is it does give you multiple trade opportunities in the day. So let's take a look at the summary of the sell or short trade for our trading strategy. First, we need to wait for a break of structure or red BOS. Secondly, we need to have bearish volume, meaning a strong bearish candle or large red candle breaking the BOS level. Then we need to look at our most recent fair value level that you can see the bearish volume needs to be larger than the bullish volume, meaning a larger red bar than green bar. Once all of this criteria are in place, you can place your sell trade and aim for 1 to 1.5 risk to reward. Now, if you have made it this far in the video, it is time for some bonus content. Before we do that, I would like you to smash the like button for this video and comment with boom down below in the comments. What you would have noticed throughout the video is that on the right of the chart, it is constantly updating with a little table. The table is showing us the labels of structure that has been identified on different time frames. What this means is you would have noticed on the 15-minute time frame that we had a change of character or chalk that was bullish. On the hourly, we had a change of character that was bullish, and on the 4 hour, we had a change of character that was bullish. Lastly, on the daily, we had a BOS or break of structure, which is also indicating the alignment with the trend. What this means is you can align yourself with higher time frames by looking at the prevailing market structure and breaks of structure that are identified automatically by the indicator. By doing this, we are using multi-time frame confluences for our trading. The table is showing us that there is bullish momentum in the market. All of the same rules still apply. For this example, we placed our stop loss of 90 points or 9 pips with our take target of 135 points or 13.5 pips. The trade example ran for a couple of candles, however we did reach our take profit level of 13.5 pips. The additional feature of the indicator is helpful as it gives you multi-time frame analysis, meaning you can align yourself with the overall trend in the market. So you will see that the strategy is able to generate a fantastic win rate by using the Lux Algo price action concepts. So feel free to test it for yourself. Now the strategy and indicators featured in the video are the amazing indicators from Lux Algo. We personally use Lux Algo Premium for our trading, and we highly recommend it to anyone that wants more success in the markets. We've got a link to it in the description below, so make sure to check it out. And if you want to see the trades that we are actually making, like this one that recently got 163% return, check out our free Telegram channel and join our all access Patreon. Links to those are in the description below. So I hope that this indicator and strategy was helpful. If you want to become a better trader, make sure to check out the following video. Until next time, happy trading!